All right, good morning, traders. Let's do an update here. I'll just do Bitcoin, Ethereum, and then Litecoin. Stick to the majors. So, guys, getting back through 10,000, I tried to put in the room last night that the game plan going into 10,000 was take a little bit of profit. I always like taking profit into a major. This isn't exactly like the chart of Litecoin where you're running into prior resistance, right? Let's just bring Litecoin up, actually. So when we're trading up into the prior resistance, it makes some sense to take profit into the old highs, okay? And then if you get through it, you can always just get right back on, or you can just add or increase your exposure. So when you talk about professional risk management, and when you understand how the pros trade, it's about working a core position. So there's times where you want to bring up your long exposure, and then there's times where you want to bring it down. When we're trading treasuries, you're never always really flat. You always either have, especially if you're trading at a big bank, you have an inventory or positions that you're selling out to your customers. So you're never flat. Maybe sometimes they would get their position delta neutral. You increase your short exposure on fives, or you hedge in different ways with futures or options. But you're trying to usually either lean long or lean short, depending on your directional view, is how you kind of carry a position. So when we buy something well, and this isn't all our buys because we were trading this versus US versus Tether and against Bitcoin too a lot of times. But if we're buying here and then you take profit into the highs, it makes sense, because if you fail up here into the old highs and then you collapse back, you'll be glad that, one, you didn't waste your time. So in other words, if you're long Litecoin all this way up and then we were to fail and come all the way back down, you just wasted your time being long and doing nothing, and then there's an opportunity cost to just sitting and doing nothing. That's kind of the problem with buy and hold. There's a lot of ebb and flows, there's a lot of cycles in between that you can be compounding your money. So take your profit into the highs. If you get back through, you can put your position back on. So I'm actually going to see how we close today and look at the hourly and 4-hour, but I really lightened up on my Litecoin into these highs, and I'm going to put that position back on here now that we're through, it looks like. All right, so there's nothing wrong with that. And it's the same thing on Bitcoin. Now, we don't have a resistance level up here, but 10,000 was a big number, especially when you look at how extended we are in the monthly. So it made sense to take some profit into right in front of 10,000. And then now last night that we got through 10,000, like 10,000, 1,100, 10,000, 1,200, I started putting that position back on. And I didn't just go all in Bitcoin and all out of alts, but I did shift a lot of my exposure to where Bitcoin is the largest position again in the portfolio. I think that makes a lot of sense. So you don't have to go crazy and just go all in Bitcoin as soon as it goes a few hundred points above 10,000. But you can see here, we're taking this, the last action items I did was I got lifted on these offers ahead above the market into 10,000. Now we're through it, so I just increased that exposure again. That's just the right way to manage your risk or manage the position. Sometimes you get out, you wait and see, and then you get right back in. It's kind of tough for traders to do. A lot of times if they sell, they have a hard time buying in again at higher prices. They want to wait for the dip. That's just kind of natural psychology. But then what happens is you can miss the move. If you're waiting for a dip and you don't get it, you're going to be kicking yourself if we trade up to, who knows, 14,000, 15,000. So execution aside, directionally, let's just do a top down. The monthly, the monthly here, guys, getting pretty vertical. We've talked about this, so this is a lot of distance between the 8 here and where price is. So it just is what it is. It doesn't mean that this can't keep going. I was thinking to myself this morning, you know, when silver was capturing a lot of the headlines, and silver had a pretty big vertical move in 2011, and you know, I'm just thinking of traditional markets lately that have had a big move like this, and that was one of them. And not to compare this whole, you know, blockchain crypto shift to silver, it doesn't even compare, but that's just one market that went vertical. So when you trade these markets, guys, they can go a lot further than you think. So it doesn't really pay to, one, to pick a top was foolish, but two, to get out of your position. You got to just trail this out. So you need to have a way to trade a vertical market, and that's having some strategies where you let the market take you out or you trail a position. So when I look at the weekly here, again, we're about 3 candles extended away from the 8, but who's to say we can't go another 2-3 weeks straight up? Okay. But what I care about is, are we taking out the prior candle's low? So you'll notice here, guys, on the weekly, the last time we really took out a prior candle's low was right here. All right, we took this, we had this drop here into this week. This is the intra-week low, and we closed the candle here. And then since then, it was each week's low was in place. Even right here, we did close the week below it, and you didn't have any follow through. You couldn't break the 8, right back up. So you can keep following these weekly, which is a very nice way to trail this market out. So if you keep getting these candles like this, you're still in your position. It doesn't mean you can't take a little bit of profit when you really get to some of these extremes, but this is a simple way to trail out your position. That way you can ride this thing without getting dinged out. And it's a methodical, very disciplined approach when you put it in a framework like that. So that's kind of what I'm watching on the weekly. I mean, these pretty good cycles here. That's what I think about that. When we look at the daily, all right, so the daily, we're starting to go a little bit more vertical. I really wish you could get some regression channels on here. It's just, these TradingView doesn't really have a good standard deviation regression channel, but what that is you can essentially lay over the price action. It'll find the mean. You just click and drag, and it'll take the average of the price action, put a mean right in the middle, and then you can set the standard deviation out from the mean. So it would be nice to see right now, based on this trend from like these lows, where we are. But just eyeballing this, we're starting to move. You see how we're kind of in a consistent power trend. Now the angle is starting to move closer to 1 o'clock. So we're probably close to 3 deviations already above the most recent price action. If you want to go back since the summer. So, and I've seen markets go 6 standard deviations. The Treasury market had a big flash crash. It went 6 standard deviations, I think in 2013. 2013 was the last time I kind of really saw a major market do a move like that. So again, that's what I mean. These markets can go further than you think. But when we do look at the daily, we're starting to see this angle and distance change, right? So this is definitely starting to overheat, but it can keep going. So the way you trade that, guys, is we got to use you can use, like I was saying, the swing line methods. We can keep following the 8 here, which we did a good job right here. We didn't get nervous. we held on here because we held the 8. And so let's see, we're basically 1, 2, 3, 4, 5 days off of this pivot low around 8,000. So don't forget about the 8.6 count. So if we get another couple of days like this, we got to be taking more profit up here. All right. I mean, in front of each candle, I'm going to be taking a little bit like this. All right, and we can do even more fancy footwork when we look at the 4-hour. The daily cycle's high, but that's what happens too, guys, when these markets get hot. Like this cycle will stay up here. We can really focus in on the RSI to kind of help us. I mean, we haven't really been at an 85 level in a while. We're pretty much there almost. You know, if you were to draw some resistance on this RSI chart, it's basically, we haven't really been this high in a while. So if this starts to go into the 90s, we got to be taking profit also. Okay. 4-hour. This is just, look at this hold of pie, guys, down here. That was just beautiful. So this is a very classic power trend. Rising pie, rising 200, rising bands, prices in the northern hemisphere. And it's really not even that much of a vertical move when we look at the 4-hour. It's, you know, this can get even more crazy, really. Again, the RSI is no doubt it's high. The cycle has been staying up here. But yeah, this is an amazing move. But look how we just hugged this 8. That just shows you, I mean, there's just constant flow coming in, constant buying coming in. But if we start to see, guys, you know, moves where you get these candles, real money candles at the end of the move can signal exhaustion also. So if this bar turns into this, you know, if we get a big bar like this and then it ends up giving us a topping tail, that would be a sign of an intermediate term top. We'd want to take profits on that. We want to take profits into like the top of that tail, obviously. So we want to watch, this is the 8 down here. We want to watch how extended we get away from this average. All right, so this next push, we need to be taking some profit for sure. All right, this next push into this zone. I mean, this is a long move already. All right, and then 10,000 is our line in the sand. We do not want to let the market go back against us. If we come up here and then we fail and we break 10,000, you're going to have a big fat topping tail on like the daily chart or in the weekly chart that'll look like this. You're going to have a topping tail, right? So that would not be bullish if we come back below 10,000. That would just be the sign that all this was exhausted and that was it, and now we gotta, you know, we gotta retrace lower. So 10,000 is the floor. That's where our risk is. And then let's just keep riding this the same way you want to trail out the 8, or you can also just watch these 4-hour candles. I'd rather kind of trail out on the daily lows, the daily candle lows. But that's it. I mean, you know, try not to overcomplicate it. Let me save this video and then I'll come back and do Ethereum and Litecoin.